Welcome back to Crypto Meets AI. Jerry here with an update for you. Do me a favor, friends. Smash that like button, hit subscribe, and comment down below. It really helps with the algorithm. Now let's get into this. We're sitting at $3.30, trading within a range of 297 to 332. We're up about 10% on the day. As we all know, the Ripple and SEC case did come to an end. They both filed to drop their appeals in court, and that's why we're seeing this massive spike for XRP. Can't wait to see where it goes from here. We've tested that 331, 332 range a couple times and keep on getting rejected, but we haven't dropped back down below the 328 mark. So it's looking pretty good. And let's go down the good old rabbit hole. And I'm sure this will be the most controversial rabbit hole we went down. The good old $10,000 XRP theory. $10,000 XRP isn't the top, it's the baseline. The thread the elites don't want you to read. When people laugh at a $10,000 XRP, they're revealing just how little they understand about macro liquidity, real world asset flows, and the true architecture of the next financial system. 10K XRP is not a moonshot, it's the bare minimum to fulfill its purpose. What's XRP's purpose? Not flipping burgers on dexes, it's to absorb global value, treasuries, bonds, real estate, carbon credits, central bank liquidity, biometric data, and derivatives. That's not a theory, that's the blueprint quietly deployed through RippleNet, RLUSD, FedNow hooks, and ISO 222 sync. Tokenization is not a buzzword. It's Wall Street's full surrender to on-chain liquidity. 16 trillion in US treasuries, 1.2 quadrillion global derivatives, 300 trillion in real estate, 1.6 trillion healthcare data economy. And what sits in the middle of all this? A neutral real-time immutable settlement rail. XRP is being groomed for this role. Ripple's new banking charter application is the missing piece. This isn't about being crypto friendly. It's about becoming the apex node of the new financial mesh, regulated on the surface but hyper efficient underneath, thanks to XRPL. Think JP Morgan on steroids, minus the corruption. Why pro US? Because this isn't a globalist coin. XRP is a sovereignty weapon, just like oil was in the 20th century. And with Trump era insiders, Fed task force fingerprints, and State Department back channel deals, XRP is the closest thing to a digital Bretton Woods asset. Now factor in DNA protocol. A ledger native token XDNA using XRPL to anchor genomic and biometric truth. RWA meets biodata. XRP settles the rails, XDNA locks identity. The convergence of finance and biology, and it's happening quietly under the US umbrella. So why 10,000 minimum? Because XRP must provide deep liquidity for cross-border trade, absorb trillions in RWA volume, maintain a high value, low supply ratio to function as collateral, anchor biometric protocols like DNA on chain that require zero failure rails. Any lower and the system chokes. 1 million XRP? Unthinkable? Not if XRP becomes the settlement layer for sovereign debt, interbank liquidity, and biometric proof of humanity. The elite laugh at this number publicly. Privately, they're already positioning. They don't need retail in this next system. They only need your consent or your silence. This is your exit window before the rails go private, before the institutions front run the world. This is the only time in history where retail has been able to front run any kind of new technology or anything ever. Don't forget that. This is going to be the biggest wealth transfer in human history. This is coming from ONDO Finance. We're witnessing a once in a generation shift in traditional finance. Capital markets are moving on chain, and this transformation will reshape the entire industry for decades to come. All the signs are there. You just need to wake up and see them. While I am thoroughly enjoying the XRP pump after both SEC and Ripple file with courts to officially withdraw appeal with the Court of Appeals, not Torres by the way, but I can't help but to be cautiously optimistic, as sharp rallies are often corrected through arbitrage bots that operate across dozens of exchanges. As I always say, the real price increase will happen as demand grows, both as a traded token and in its utility. Volume consistently needs to be over 30 billion daily global. This will make the bots as effective as a very well-trained ninja ant. So enjoy the pump. I am still rooting for $4 next few days, but the real race has yet to begin, because the real race starts when utility drives the price. And we're going to go over why XRP is decentralized. XRP operates on the XRP ledger, a distributed ledger technology managed by a network of over 150 independent validators, spread globally with no single entity controlling more than a small fraction. Ripple, the company associated with XRP, runs only about 3% of these validators, and anyone can run a validator node, ensuring no central authority dominates. The ledger uses consensus protocol, not proof of work or proof of stake. While validators agree transaction validity every few seconds, making it resilient to control or censorship. Unlike Bitcoin, XRP supply isn't mined. It was pre-allocated, with Ripple holding a portion in escrow, released gradually. However, the ledger's open source nature and diverse validator pool counters this, as no single party can alter the network's rules or halt transactions without broad consensus.
XRP sits, as I said, on an open, permissionless ledger. How do I know that it's open and permissionless? Because the Chief Technology Officer at Ripple tells me it is. He explains it to me, but I also have hard evidence. The SEC announced about a month or two ago that they're going to establish a node on the XRP ledger and other open and permissionless ledgers. The SEC didn't call Ripple to ask permission to do that. They're just going to do that. XRP sits, as I said, on an open, permissionless ledger. How do I know that it's open and permissionless? Because the Chief Technology Officer at Ripple.
I hope this helps anyone that was confused or not understanding it. 42 banks just tried to stop the future. Ripple's banking license is under attack. The BPI, representing JP Morgan, Citi, Bank of America, Wells Fargo, Goldman Sachs, and 37 other financial titans, just filed objections to Ripple's application. Let's decode the panic behind the power move. Why are banks blocking Ripple? Because Ripple doesn't just threaten to join the system, it's building a new one that runs on-chain, settles instantly, and doesn't need them anymore. This is not a turf war, it's the last stand. Who is the BPI? The Bank Policy Institute, as a lobbying arm of Wall Street's deepest arteries. Its job is to defend the old rails where trillions move slowly, opaquely, and with fat fees. Ripple threatens to nuke that model overnight. Let's break it down. Ripple applied for a U.S. banking license. This would allow it to be a direct bank plus settlement rail. It eliminates the need for correspondent banks, and it enables XRP as a liquidity mechanism at scale, and they know it. Here's the real fear. If Ripple becomes a licensed bank, it can offer custody for CBDCs, settle instant FX, serve institutions without the middlemen, convert XRP directly into fiat at the source. The cartel loses control, and the price suppression game's over. The banks calling Ripple a risk are the same ones that launched the 2008 financial crisis, paid billions in fraud and laundering fines, manipulated labor, froze accounts for political dissent, and they're worried about Ripple's transparency. What they're really saying is, we can't let Ripple through the front door because then everyone sees what we've been hiding behind the curtain. Ripple doesn't ask for access, it builds it, and XRP makes sure everyone can use it. The global picture. While the U.S. mega banks stall Ripple's license, Ripple is onboarding countries, central banks, and global payment corridors. XRPL volume is rising. Tokenized finance is being engineered around legacy gatekeepers. They are being isolated in real time. Ripple is the American Trojan horse, built in Silicon Valley, stacked with U.S. regulatory alignment, quietly backed by Fed connections and military-grade security. The banks are scared because Ripple isn't anti-America, it's anti-cartel. When 42 banks unite to block one company, you're not watching a routine objection. You're watching a full-scale defense mechanism activating. Ripple isn't applying for permission, it's applying for pressure, and XRP is the fuse. And the fuse is about to be lit. That's what I have for you folks. Until next time, stay savvy, stay stacking, and I'll catch you in the next one. If you enjoyed this, smash that like button, hit subscribe, and comment down below. And if you want more crypto deep dives, check out our videos right here on Crypto Meets AI. Thank you for watching. Remember to always do your own research. This is not financial advice.